Hello everyone, Mario is back again. Today I'm gonna be talking more about macro stuff because we have a lot of news coming in this week. We had the earnings report, we also had interest rates all across the world coming in, and I think it's worth to mention it because this channel is not only about cryptocurrencies, but we like to cover also macroeconomical topics such as the interest rates, also the inflation rate, how is it progressing. And with that said, actually, let's jump right into it. I'm gonna be covering news across the major countries such as US, China, European Union, and Australia, and so on. And let's start with the interest rates. What's worth mentioning is that Bank of Canada is keeping their interest rates at 5% right now. They've been steadily holding it for a while now. Same thing for European Union. They are also holding at 4.5%. But what's super interesting actually is that Turkey, they increased their interest rates to 35%. Just to put that into perspective, to USA, which is right now at 5.5%, imagine the interest rate is at 35%. I even double checked this if it's correct. But yeah, in Turkey, the interest rate is 35%. So just something to think about. Let's move on from interest rates to inflation and prices. In Japan, the inflation actually came in lower than previously. It's right now at 3%. We can see a little decline in Japan's inflation, which is good news for them. The core inflation there also follows this trend. What's next up is Germany, and we can see that the producers price index month over month came in lower. That's actually good news for them. So what the producers price index usually suggests that we're gonna see some lowering in the consumer prices as well, because basically the production of goods is getting cheaper. Therefore, the prices are likely to follow this trend as well. By the way, I plan to prepare more educational content on these macro topics such as the inflation, PPI, CPI, how we measure it, what kinds of inflation do we have, and also how the governments and central banks in general fight inflation. So if you're interested in more topics like this, please let me know in the comments. Smash up the like button. That's how you can support this channel. And I'll be excited to be talking about these topics for you more in depth in case you don't understand them. So next up we have Australia. Their inflation rate year over year came in also lower at 5.4% compared to the previous period. And we see also a decline all the way from beginning of this year. So that's good for them. But still the inflation is quite high there. On the other hand, what we see in Australia, the producers price index came in a little bit higher. So maybe we're going to see the inflation actually stagnate a little bit and stay a little bit higher. Moving on, let's have a look at the labor market. In Spain, we see that it came in a little bit higher than previously, but only just a little bit. Mexico actually lower. And in US, the initial jobless claims have risen actually by around 10,000 month over month. So it signals that there are more unemployed people. Finally, I like to have a look at the housing market. What's worth mentioning there is that we see new housing price index in Canada actually decreasing. In the United States, the 30-year mortgage rate actually is going up. So it's right now at 7.9%. So the mortgage rate is getting actually pretty high. If we have a look on it, it haven't been this high since the 2000s. So this also signals that the prices of homes is actually getting much harder to achieve. It's much more expensive to buy a home. And that's how also the Federal Reserve is trying to fight inflation so that we see less home sales going on. But on the other hand, we see new home sales actually rising in the United States. So we are getting into this loophole where nobody actually wants to be going down with the prices. The sellers don't want to go down. On the other hand, the buyers can't really afford to be buying homes, but still we see new home sales opening up. Let's have a little bit more look into the earnings report that I already mentioned. We had big companies having their Q3 of this year reported, And all over the board, actually, we see positive numbers compared to the previous session. The biggest surprise was maybe at Amazon, where actually they increased their earnings per share by almost 60%, which is actually very, very significant. And when I look at all of these green numbers, it signals to me that the economy is doing overall good. What it though means that the Federal Reserve have no real reason to be lowering their interest rates because the economy is doing great. Why should they actually be helping out and lowering interest rates if everyone is doing well? We also don't see the employment going too high. So I think the Fed is going to keep on the interest rates higher for longer, as they've been saying. And let's zoom in on that a little bit. And we're going to see interest rate decision in November the 1st. Right now, the forecast is that the Fed's going to keep on at the same levels at the 5.5%. But as we can see already for the December Federal Reserve meeting, we can expect 5.75% interest rate, which means a 25 basis point rate hike actually. And I think it would make actually sense, especially when we see the strong economy going on. There's no real reason for the Fed to be lowering rates yet until something goes really wrong there. So let's see how this plays out. Also, we're gonna have more data points coming in before these ones. We're gonna see the inflation report for October on November the 14th, so in roughly more than 2 weeks. And we right now don't have a forecast yet, but to be honest, I kind of expect the inflation to come in lower than the current one at least. Also, I'm going to move on to the charts because when we look at the S&P 500, we can see it's declining right now. And so what we've been measuring is the Q3 reports, which come to end of September. Yeah, we've seen it rising a lot in Q3. But if we're going to start measuring October, we can see that the prices went much lower. And we see this all across the board. Also on Microsoft is much lower. What's worth to mention that in July, they even put in a new all-time high. So we've really seen a strong Q3 actually for stocks all over the place. Same thing goes for Apple, Amazon as mentioned as well. So that we see that the stock market had actually overall a really strong Q3. And I think it's going to definitely lead to Fed pausing even for longer. What's interesting though to see is that Bitcoin and cryptocurrencies are decoupling from the stock market. I'm going to be covering this more in the next video, where I'm going to also be comparing Bitcoin to actually other currencies than the US dollar, because we've seen some new all-time highs in the Bitcoin price when we don't compare it to the United States dollar, but to other currencies such as the Turkish lira, for example. And I'm going to be going more in depth on that one. Yeah, so let's check a little bit just quick what S&P is doing here. Since we're here, we are retesting these previous resistance lines, which we've been testing for a while, for over, let me measure this real quick, for actually 49 weeks, even longer. And once we broke above it, we retested it, and then we bounced from there. And now we are retesting these previous resistance as support. So I'm really curious to see if we can hold it. This is actually not even a bad trading setup. So guys, if you watch all the way to this part of the video, I want to give you a big thank you. If you want to support me, make sure to smash that like button, send it to someone who can find value in this video, and let me know in the comments if you like this more macro-oriented videos. Me personally, since I'm an economist, you know that I have a degree in economy. I really find it interesting and I find it actually exciting to be talking about these topics. So let me know what you think, and thank you once again for watching. Have a nice weekend and see you next time.